Hello, I'm Donald Leggett and welcome to Share Views, brought to you by London South East. Our guest today is Keith Bush, Chief Executive of Cabot Energy, who have a production-led growth strategy and are currently extracting oil in Canada. Today, Cabot released operational numbers for the first quarter. It's an operational update basically, and I'm joined by Keith Bush, Chief Executive of Cabot Energy. Welcome, Keith.
Morning, Donald.
Okay, let's start off with a standard question. Sum up Cabot for those who are not familiar with the company.
So we're an oil and gas company, full cycle. We cover production, exploration, appraisal and development. We're mainly focused on production in Canada at the moment and growing our production base. We've gone from an average production or gross average production last year of 400 barrels a day, and we're looking at growing that over the next 3 years and to something that's really substantial, whilst developing our high potential exploration opportunities in Italy.
And today's announcement is an operational update, so if you could summarise the key points for us, please.
I think the key point is to show that we're actually delivering on our strategy, and we are very much focused on production-led growth. We've gone through, in the first quarter of this year, we've drilled 4 wells in Canada, 4 sidetrack wells. They've had very good results. I think they've been a testament to the technical team. The production that's coming from those wells is already tied into our existing facility, and so we averaged in the first quarter 725 barrels a day, and that was restricted. We did some maintenance work, and we had one of the wells was shut in for a while. So we're in April now. We're averaging about 950 barrels for the first wee while in April, and we're looking to increase on that and go over the 1,000 barrels in the very short term. Very much focused on our production growth. I think our average for last year gross was 400, as I said. So that's a big step up from there, and we're looking to go further.
And what difference does that make in revenue terms for the business?
Oh, it's very significant because 400 barrels a day, we're effectively covering our operating cost base. But with wells that are already tied into our production facility, the additional operating cost is very small. So effectively what you're doing is you're adding on barrels onto the bottom line straight away. And if you look at the oil price, I mean, our budgeting was done at $50 WTI last year. We're now looking, I think we've been over 60 for the first quarter of this year, and it's not looking like changing. So that's very good for our business.
Happy days. At a strategic level, what did 2017 and the first quarter of 2018 mean for you?
Well, I think we raised a small amount of money at the end of 2016, and we looked to grow. We looked to focus on our production business. It's when our major shareholder originally came into the business. Since then, during 2017, we very much grew the production base from small beginnings up to a decent exit rate. And now we're looking at continuing to do that. We did another raise at the end of last year, beginning of this year, where High Power Petroleum, who are a subsidiary of iPulse, came in for a large proportion of it because they understand the value of the assets. They recognise that there's a very good growth potential there, and they're ready to put their money where their understanding is and invest in our production growth this year, which is where our strategy is taking us.
So HP2 was your transformational deal last year. Now, essentially, that put you 100% in charge of operations on the ground in Canada and gave you a very significant shareholder. Summarise for me how significant that is for Cabot.
Well, I think it goes 2 ways. One, we know we have a shareholder that's willing to back us. They've shown they're willing to back us by investing in the business, and they will look to back us in the future as well. And H2P are a subsidiary of iPulse, which is a big private company, so they have the funding to be able to do that. But 2, they also understand that we're a PLC, and they want to bring in other investors. They want other investors to come along because it really is a true growth story, and many people can benefit from it.
It's good news having a big shareholder like that, but it's also you also have a tough shareholder who are going to demand returns. So in a sense, their interests are rather aligned with private investors' interests, I would have thought.
They're very aligned to private investors, and I would say that life is better with them on board, but it's also harder, and they make sure they grow the value of the business, they grow the value of their investment, and they make sure that they're on the management team to do that. And I think that's absolutely fine, and it's good for me and it's good for the rest of the management team, because it means that we're very focused on what we're trying to do.
So what are the plans for 2018? You actually, I understand, are going to be spending $14 million. Where does that get spent? What kind of returns are you looking for? Tell me about it.
Well, so of course we've spent some of that already with our drilling campaign earlier this year. We did 4 sidetrack wells. We've got another up to 6 wells to drill during the summer period, depending on the results and how these wells continue to produce. I think that they're all looking very positive at the moment, so we may need to drill less wells to achieve the same result. The actual focus on the capital is definitely on the drilling. So there are other opportunities that we have. We'll do some small amount of facilities work. We'll make sure that we maintain the integrity, because of course when we picked up these facilities back at the end of 2015, they were only doing 150 barrels a day, and we need to make sure that the maintenance program, the preventative maintenance program, is in place to be able to take us to the 3,000 to 5,000 barrels a day that we want to get out of these fields over the next 2 to 3 years. So a bit of capital focus on that, but definitely most of it is on the drill bit, adding production and hence adding direct value into the company through the revenue stream. And
what's your oil out of the ground target for the end of 2018, would you say?
So the range we're looking at is between 1,600 to 2,000 barrels a day. We want to average, for me the important part is the average of 1,000 to 1,200 barrels a day, because that's a significant uplift from where we were this time in 2017, where it was 400 barrels a day average gross from that reservoir. That's a big step up, and that's a huge step up in terms of the cash flow to the company and the net profit ultimately.
Cabot has been an exploration company. It is now very much a production company.
Mm-hmm.
Are those different skill sets? Are you experiencing a bit of management stretch at the moment? Is it actually tough having to spend 14 million and look after it?
It is, definitely. I think we need to have the right processes in place to make sure the controls are there, to make sure the money's being spent in the right way. We have expanded our team in Canada, so we've brought in someone to deal with regulation. We've brought in someone to look after the health and safety, which is of course very key. And we've also brought in some more engineering expertise to make sure that we're getting the most out of the facilities that we have there. We have our the company chief operating officer is over there acting as president of our Canadian subsidiary. So he's very much a production focused person and is very much focused on bringing that production forward. And we've also expanded a couple of people in the London office, a bit more technical experience, another reservoir engineer, because we're looking at developing multiple well opportunities for next year, and the team that we had just wasn't big enough for that. And so you're right, it does provide some stretch. It's a great problem to have, and we need to make sure that we just have the right people in place to do what we need to do.
Okay. So we don't often talk about Italy, but it is a long-term significant in your plans.
It is, yeah.
Can we talk about the Adriatic licenses and what's actually happening, what work you're doing there at the moment, and what the plans are?
Yeah, so the Adriatic licenses have been with the company for a number of years now. There was a bit of hiatus in Italy where it was difficult to make progress there, but that's changed, and we're starting to make progress again now. We've actually gone through, over the last couple of months, we've gone through a marine mammal monitoring survey, which is effectively monitoring the movements of marine mammals, dolphins, whales, that type of thing. We've completed that.
Any problems?
No, it was fine. You would have had issues if there were potentially hotspots of whale pods or dolphins, but actually it's just normal mammal movement through the sea there. So we'll submit our report to the Ministry of Environment in Italy, and then they'll go through the process of approving it, and then hopefully we'll be able to acquire our seismic towards the end of this year. And as you pointed out to me, we're commissioning the seismic program. We'll be running the operations ourselves, and I think that's very key, because we're then looking at drilling wells in the Adriatic.
Okay. So your next steps are to commission 3D seismic. What time frame are we looking at?
So I think we want to commission that for the end of this year. We've gone to a number of different companies that will do that type of work, and we've got some offers in from them, and we're going through the process of understanding what the best technical and financial offer is from that, and then we'll look at when we've got the approvals in place, we'll be able to then commission them and go ahead with the seismic.
And where exactly are these prospects?
So the location is, we're outside the 12-mile limit, which is a key thing in Italy, because anything inside you can't move forward, so we're well outside that. It's right in the southern Adriatic, so opposite the port of Brindisi, and it's a place where it's fairly benign, so you're not talking North Sea type weather in the winter. It's relatively easy to acquire any sort of seismic there in the winter months, which is what we're looking to do in. And I think that the potential, the hydrocarbon potential of those assets there is very high, and it's a very underexplored area.
So it's an exciting prospect.
Absolutely it is, and I think it's something that we're willing to spend the time that it takes to get things done, because the opportunity is so good.
You also have onshore gas in Civita. Summarise that for me fairly briefly, could you please?
So we acquired some assets from Rockhopper last year, one of which was the Civita asset, which is the main producing one. There were 4 other licenses included in that as well. The Civita one is accruing production to us from the 1st of January last year, and so when the actual deal completes with the Italian regulator, and it's subject to Italian regulator approval. We're just going through that process now. There aren't any issues with this, it's just a slow process, and actually it does get affected by the political side of Italy, and of course they've just had their election, so that's had an impact on the timing of it. But it makes no difference in terms of the value that it brings to us. So Civita's producing. There are also 2 other assets there that have the potential for redevelopment, potential additional exploration, and that's very similar to what we've done in Canada, although this is all gas-based rather than oil-based.
So 2 interesting wells in Civita +2. You made an acquisition. Can we expect other acquisitions from you perhaps going forward?
We are looking at all sorts of different types. Italy is very much a focus area for us. We like the idea of an offset of European gas production against North American oil. I think they're quite a nice natural hedge between each other. And yes, so there are things that are going on, but it's early days.
And if you could summarise the outlook for Cabot Energy, perhaps into 2018, another 2-3 years beyond?
Yeah, very much focused on our production-led growth strategy, maturing our production in Canada so that we get to the 3,000 to 5,000 barrel a day mark that we want to get to, but also making sure that the high potential assets that we have in Italy are moved forward, both in the operating perspective from the southern Adriatic, the Sicily Channel, but also the non-operating perspective, our Cascina Alberta permit, which is operated by Shell. We really want to see those assets mature into exploration opportunities, because the potential there is really good.
Are you excited by the outlook? Should you expect private investors to be excited by that outlook?
I'm definitely very excited. I think that private investors will be excited when they see what we're going to do, and we deliver on what we say we're going to do, which is going through now.
Keith Bush, CEO of Cabot Energy, thank you for joining me. It's always a pleasure. And thanks to you for watching as ever, and don't forget to subscribe to the London South East YouTube channel for more interviews like this one. Thank you very much indeed.